morning, everyone. Welcome to the Daily Edge from the Place Your Trades Network. I am your host, Anne Marie. We are the network that focuses on trading daily options using the CME Group's event contracts to trade indices, energy, metals, and now Bitcoin. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading the CME Group's event contracts. You can trade them on the custom app or using Dome on the main platform of Tradeovate. I'd love to direct you first to the screen here at the Place Your Trades Network. I'm sitting here in the pre-market. We're getting ready to go live stream to my most favorite person in FinTwit, and certainly one of them in all the world, Brian Shannon. But we'll start here at the pre-market. You can see that Shy Girl gives us a great rundown of what's going on overnight. I mean, she has been on it day after day, telling us what's going on from the broad macro events. And we have our daily gap stats. Yesterday, the indices had a magnificent gap stat with the NASDAQ that gave us a really, really nice return. You can find these. These are gapping up or down, but ending up above the open. And my favorite place to go are the options tools, which tell us where people are positioned in the event contracts, thinking about whether they'll end up above a certain level or below a certain level with the yes, no's. And now, without further ado, I'd love to introduce you to my friend, my colleague, someone that I have really counted on through the years, leading me through the market, Mr. Brian Shannon, author of the second and most fantastic Anchored VWAP book, which I keep nearby on my bookshelf and refer to quite often. Thank you so much for coming, Brian. I appreciate you making the early morning event. Yeah.
Good to see your smiling face.
Well, I appreciate that. And I love that Fibonacci coloring behind you on the wall. It is, I don't know if people comment on that when they get to see you, but it certainly is one of my favorite things to look at. And in the market, another one of my favorite things to look at is this Anchored VWAP, which I really will, honestly, I was very resistant to incorporating it because I'm sort of a one-trick pony in terms of saying support to resistance. And it really was so eye-opening for me to use it and see it inside of the place. Now, you did get to the space where you've written the second book, but you've had a long journey in the markets and it's still continuing and you're still growing like all of us. Right. But in terms of looking back at your career, can you remember one or two events that you felt were path moving, the space that made you go, you know what, I'm on a different level. I can see things in a different space and success is going to come more easily for me, or it did come more easily for me as you shifted onto that track?
Geez, you know, I'm not sure that there was an aha moment on the upside. It was more of a, recognition of damaging things that I was doing that I just told myself, I've just got to stop doing this. Otherwise, there's no way I'm going to continue to be in this business. And, I used to be long ago a person who would look at a stock and say, hey, that's down too much. Oh, it's going to find support at that moving average, so I'll buy some. And then it would drop a little bit further and I'd, argue with the market and, think how stupid could this market be? Well, it's not going to hold the 50-day moving average. It's definitely going to hold that 61.8% retracement. So I'm going to add more there and just add. And at the end of the day, I'd have all these shares, look at it with this massive loss and just puke them, which was the best thing to do generally, was just to get rid of the loser because most of them continued lower. But I would, do that once or twice a year. And, it was so damaging. So now, I mean, I'm constantly preaching, don't buy the dip, don't buy the dip. only price pays. I mean, these are things that I tell myself. I mean, I'm sharing that with other people as well, but I still to this day have to remind myself, only price pays. Don't listen to the news. You hear this great story and this wonderful technology, and you think, hey, that, I can see that. I can get behind something like that. And you look at the fundamentals, they all support something, but the stock starts going down. And if you're stuck in that mentality that you think you know something more than the market does, that's when the big losses come. So it was more the ability to recognize that I'm wrong, recognize quickly, and then just move to the sidelines and reevaluate.
That is a really great synopsis. And as a matter of fact, you turned that into an image. So, Savannah, would you show that image for us and let Brian talk it through? Oh, sorry. It's the image that you built for the accumulation and distribution.
Oh, okay. So I don't think I still have that shared. Is that the hold on, I apologize. I think I
So,
screwed up when I shared the other screen. Now, how do so sorry. What is going on here? There it is. Okay. So you're talking about the market
exactly.
structure. Yeah.
Yeah, and this really describes exactly what you were talking about in terms of where you find that space where you go, hey, listen, if it's fading, it's going to keep fading until it stops fading. And so talk folks through this. And then, of course, if you follow Brian, you can go to his website at alphatrends.net and take a peek, and you will find this market structure here. But quickly tell us a little bit about how you have broken this up so we can understand how prices move.
Sure. So this was originally Wyckoff analysis, and then Stan Weinstein kind of popularized it with his book, and then I took it to multiple time frame analysis. And basically, it's just the cyclical flow of money through the markets, and this could actually represent any time frame there is, because even a day trader will see these four stages: the accumulation, markup, distribution, and decline. So all of my analysis before I even start putting anchored VWAPs on begins with this. It is about market structure. I want to know that I'm on the winning team, and the winning team over here is the bulls. The winning team is the bears. And in between, with all this choppy nonsense, it's time to just look at it and say, you know what, I just don't see my edge. Cash is a position. I'm not going to trade this market, or I'm going to switch to a different time frame, find something else to trade, or take the day off or whatever if you can't find the opportunities. So it's just about putting kind of categorizing it, and with as with a lot of technical analysis, people are take it a little bit too seriously. They always want to know, well, are we in stage 1-3? Are we in stage 2-1, 2-2? And bottom line is, we're in the markets now, we're in a stage 2 uptrend, and that's the buyers have control on the daily and the weekly time frame. Now, intraday, we're going back like for the last 2 weeks or so, we're showing a little bit of indecision. So we're just kind of consolidating and waiting for the next move to see, can the buyers continue to hold it as, for the S&P and the NASDAQ, that is, at this rising 20-day moving average, or is it going to correct a little bit more through time? And now it's, kind of the Russell 2000 starting to pop up in here a little bit. So it's all about breaking it down to where we are, and then drilling down to a shorter term time frame. So for me as a swing trader, I like to be aware of the weekly time frame, but my daily time frame is really kind of where I find my ideas. Then a 30 or 15-minute time frame is where I look to establish my risk reward, and then my entries are on a 1 minute, 2 minute, 5 minute chart. So and again, it's people say, what's the most important time frame? And the answer is all of them. I said this to Richard Moglen a little while ago, and it's kind of like asking Van Gogh, what's the most important color you can paint with? And he'd look at you and go, what are you talking about?
Exactly.
You got to use them all. It's how they blend together. This is the science of technical analysis on this chart here. But when we blend the time frames together, that becomes your art. And understanding that you're going to interpret it a little bit differently than Anne Marie is going to than Richard Moglen or whoever is out there. We've got to personalize it and find our time frame, whether it's a day trade, swing trade, something longer term, or in between.
All right. Hey, let's dig a little bit deeper into those exact points. I know you've got a chart up that you could see. I think it's the other one, the first one that we saw up there, that will show us a little bit about what you mean by those. In complete transparency, I've always I love multiple time frame analysis, but when it comes right down to execution, if I spend too much time still looking at all of them, indecision runs into my brain. And of course, what we want to look for is confluence. But talk to me about that. I love what you've got split up there for us.
Yeah, so trend alignment. So here, here's the SPY. On the left is a daily time frame. That's a 20-day moving average, a 50-day moving average. Year-to-date anchored VWAP is that thick blue line, and that's a 200-day moving average. On the right is a 30-minute time frame. So what we're taking here, and I know you can recognize this, but just for the audience, is basically this portion of the daily time frame is what we see over here, magnified with 30-minute candles. So that is this. We're just dialing it in on a multiple time frame analysis. So what I see here, Anne Marie, is conflicting trends, and that we've got, one of my favorite intermediate term tools is the 5-day moving average. That's that orange line. So just a quick explanation for people. The market's open 390 minutes a day. Over the course of 5 days, it's open for 1,950 minutes. So that sounds geeky, but it's just how we find the intraday 5-day moving average. So if we're looking at a 30-minute time frame, we take 1,950 minutes, which is 5 days, and divide it by 30 minutes. That means the 65 period moving average is 5 days. So 65 times 30 is 1,950. So that's the true 5-day moving average. And this is where we were 1,950 minutes ago. That's what I call the alpha dot. That's brand new feature. So I look to this and say, when the 5-day moving average is declining, it's guilty till proven innocent as it starts to flatten out. So this is stage 4. This becomes stage 1. As it breaks a higher high, this is stage 2. Then we get thumped. And now we're kind of indecisive, and possibly, if we stay stuck below this 5-day moving average and do this, then it might be that the 20-day moving average doesn't hold, and we could see a deeper sell-off, maybe even down to the 50. So I'm looking at this saying, what's my true advantage in the SPY right now? We've got a short-term, kind of guilty till proven innocent, cautious stance, daily time frame, and weekly time frame. We're in a beautiful bull market. There's no reason to think that this weekly time frame, we're above a rising 10, 20, 30, 40-week moving average. And in this line, by the way, is where we were 40 weeks ago. I just like to keep track of anticipating the direction of the 200-day or 40-week moving average. So back to the 2 time frames, that's the bearish scenario that could potentially play out. Or we do this, and then the 5-day moving average flattens out, and we're boom off to the races again. But right now, I simply don't know. And going back to your questions of, what did I learn early on? I would sit in here and go, well, we're in a bull market, so I'm going to buy this. And I would, buy it on the way down, and then I'd puke it right here, and then I'd watch it go up and chase it. And all the things that people without a strategy don't do. So instead, I'm comfortable looking at this and saying, I'm going to stick with the stocks that I know are in my trend, that I'm still holding stocks like ICE, which is breaking out on a weekly time frame, past this weekly. I've spoken about that numerous times on Twitter. HPE is a good one that I got long this morning. And, it just broke above the anchor from that high. So it always begins with, where are we overall for that? One, the market, but I also view it as more of a market of stocks. So, each stock individually. INMD just broke past the anchored volume weighted average price from the all-time high. And this was a beautiful stage 4 decline, stage 1 accumulation. To me, if the buyers can maintain control, in a stock like INMD, I don't know anything about the fundamentals, but just based on money flow, it looks like
Mm-hmm.
it should do something like this over the next year, year and a half, or something like this. So those are the types of moves that, I'm always trying to anticipate what's next and what's going to get the crowd involved.
So I want to alert the folks that are listening to hear the way that Brian was very precise about mapping out what was visible and what could happen. And so in my mind, this is where I see very great technical strength from all the folks that I talk to that really understand what's going on. There's this central arcing overview that says, here's what could happen. And then relative to that, do I want to position in here if my risk sits where it is? And what a lot of us forget is that there is a very big risk element. Brian actually spoke about it when he began to talk about the points that made him say, hey, listen, for me to continue moving upward, I've got to really start managing that risk event that allows that to give me a drawdown that I really don't want to have. And this is the explanation of his commentary with the direct price action event. So as we talk about direct price action event, he brings up another really great chart, and it's got an anchored VWAP on it, I see. And tell us about the anchored VWAP and how you like to use it.
Okay, so I was just flipping around looking at a few things there. Sorry.
That's okay.
I was just looking at so we've got the SPY right here, right at that 5-day moving average. And we can see that we were there this morning right on the open, and are here again. This blue one, I like to keep track of the month to date anchored VWAP. Now, this month, it's not really providing much value. I think so it will on other stocks and that sort of thing, but it's just something I keep central, just like the year to date anchor on the daily time frame. It's not always going to be valuable. But here on the shorter term time frame, we gapped up this morning. The buyers had control for the first, these are 1 minutes. So the first 12 minutes or so, then it broke below the VWAP and sold off pretty hard, rallied up, found supply at the anchor, at the VWAP for the day. So VWAP for the audience is daily volume weighted average price. It begins at the beginning of the day. The anchor designation simply means it's starting from a point other than the beginning of the day. So if I wanted to say, as the market broke down, I might have put an anchor right here at the high of the day. Or as it started rallying back above the daily volume weighted average price, I would say maybe I want to put one on this low. So, or from this shakeout. And then I could say, well, maybe the momentum is slowing from this move higher for true intraday traders, scalpers. Another way to look at it is, if you're not in this market right here, as it began to rally, what you can look at is say, okay, well, I don't want to buy these dips. I want to buy when buyers are in control. So if I put an anchor here, it tells us the average price during this time, the buyers from the highest point regain control right here. So maybe if I'm scalping the E-mini on 1 minute charts, I could be a buyer right here with a stop under here and then look to sell some on strength. Then the next pullback begins. So if you weren't involved in that one, now you could just go, okay, from this 1 minute high, where do the buyers regain control? Right here. Set my stop under there, sell some on that break of that strength. And I mentioned this because we were talking, the title of this, I believe, was something to do with day trading with the VWAP. And now we're at, are the buyers going to regain control here again? What I want to see is something like this, and then maybe be a buyer. Otherwise, going back to the bigger time frame, we're finding supply at the declining 5-day moving average. This is where we were 5 days ago. So that means that for the next, unless we're up here in the next 2 days, that 5-day moving average will continue to decline. Even if the market goes sideways, the 5-day moving average will continue to decline. And that might be a good thing because again, maybe that would mean we're able to break above it. So I think I
Consolidation.
answered
Yeah.
10 questions that you didn't ask. So I'll slow down.
So am I to assume by your positioning that you like anchoring that VWAP at peaks and troughs?
Yes. Yeah.
Okay.
Yeah. So let's go back to that INMD, for instance. What it tells me when I anchor from the all-time high, there's that phrase that I often repeat: if they didn't scare you out on the way down, then they'll wear you out during the sideways accumulation. There's never a hurry to get into these things, but you wait for the buyers to regain control. So what this tells us is the average price, the average share that traded since that peak, every single one of these, if you take every single transaction and average them together, the average price that this stock traded at was right here. That is the average price adjusted for volume. So, as it rallied up a couple times in the past, it got rejected from there. Then we started seeing higher lows. And then when we dig in, we can see we have a rising 10, 20, 30, 40-week moving average. So now this tells me that for the first time since that peak, the buyers, we know with 100% mathematical certainty, and I know you love math, that the buyers are in control. It doesn't mean they're going to maintain control, but they have control for the first time on a closing basis, because it's above that point right there. That's the average price that short sellers are short. That's the average price the longs are in. So the average short seller is starting to feel some pain. The average long is starting to feel good. So that's going to, do two things. If the average long is feeling good, they're less likely to sell it. So less supply. If the average short is losing money, well, then maybe they're going to start to buy and add demand to the equation. Then we get the breakout players, and then we get the institutions who had been accumulating over the last year. Now they're trying to push it out of there to send the message to the rest of the market: hey, this isn't a bullish trend. You should start to participate. We bought our 30 million shares down in here. Now we're going to sell 2 million on the way up, buy a 500,000 on the way back, sell 1 million on the way up, buy another 500,000, and just help create that trend and maintain that trend.
Excellent. Speaking of trend, how much weight do you put on the slope of your anchored VWAP wherever it happens to sit, whether it's long term or short term?
Yeah, excellent. Because so for instance, if I'm looking at, I'm not sure it's going to work here, but if we've got the moving average, I'll put emphasis on how far it moves to get there versus a normal move. And here it was just kind of flat. So I wouldn't buy a break above it necessarily right there. I might have purchased actually right here and then quickly gotten stopped out. I wouldn't have purchased here because it expended energy, but as it came back, tested it, I would have bought right over here. I didn't buy it because I wasn't watching this. I was looking at my stocks, just because going back to the bigger time frame, I don't see my edge. But if I was strictly scalping, like to buy here, and again, that's where it overtook that volume weighted average price after these pullbacks. So the question is, how much do I put on the slope? And the slope is definitely important. I like to see it kind of, if we were to break below this VWAP right here, I wouldn't think it would just die. I would think it would rally up, test it, and then come down and be a short over here. So it's the slope, Anne-Marie, and I'm sorry to interrupt you, but also how quickly did it expend energy there, and now I'm late to it even on a scalping basis. And the key to remember here is, just for the audience, if you're not a day trader, this could be a weekly time frame. It could be a daily time frame, 30-minute time frame. The interpretation is always the same.
Exactly, because of that beautiful fractal nature of the market. Yeah, where patterns repeat themselves continually. So these are some fantastic takeaways. I love this notion of testing the floor and then recapturing that higher level of support that's combined with the motion of that anchored VWAP. It's just tremendous. Could you put up a futures chart for us?
I could. I'd have to go over to a different
no worries. I'll do it.
Platform.
Yeah, I can do it here.
Okay.
I will take over the space here and put us up, taking a look at the Tradeovate platform. What I have is the VWAP that was
Are those
anchored
5-minute candles?
yes, sir. Yes,
It looks
sir.
like my
They
5-minute chart. Yeah.
Yeah. So what we are learning here from Brian's walkthrough of how we use this VWAP, he talked about, hey, if we were looking at this kind of bottoming formation and we were thinking about taking the trade above that VWAP, it's better for it to recover the VWAP and pull back and hold it. That will give us that long area. And he also mentioned something really great. He said, my longer term time frames don't give me edge. And so I'll be looking at this from a traditionally day trading / scalping event. And so what I do notice a lot are traders come into the space and set up on a very tight time frame, but then hold out because they're thinking, hey, I could make XYZ if this keeps running, when realizing that if you step back first and look at that big picture event, you're going to see that the probability of that running into the upside is really not in your favor specifically. So if I were to extrapolate that from where we are, we could easily, for me, I focus on the slope of that VWAP a great deal. And my absolute favorite time frame is not one that you love, because you think you have said, hey, there aren't any hours in the market, so you really are not looking at that sort of rounded space that gives you specific amounts from 9:30 to 4, but I'm looking at the market in a continuous form where the prices are really, there's an hour of a gap and then we jump right into the forward motion. And so I love this hourly because it tells me specifically what's going on, and I'm not really sure why my VWAP has appeared, but let's have a peek.
You know, Anne-Marie, you just brought up a good point, that it's not as important in the futures markets. That's more for equities, the 9:30 to 4, because as you mentioned, you know, futures are basically 24 hours. And, you know, the reason that you wouldn't want to use a moving average in the futures, like a simple moving average or an exponential moving average, is, you know, what is it? I don't even know. 85, 90% of the volume each day occurs during regular trading, you know, NYSE hours. So if you're putting equal weight on the overnight hours as the regular hours, that gives you an unfair look. You're giving equal weight to less market importance areas. So the anchored VWAP takes care of that because it normalizes the volume and says, yeah, we only traded 2% of the overall volume, but it doesn't matter because that's getting represented equally into the anchored VWAP equation.
Which is the beauty of using VWAP, really. For those of us who might be resistant to this, it really does tell you how traders are positioning. And I do really pay attention to that sloping event to tell me, hey, is it fair that I look for support as it comes into these motions? And so a wonderful way to actually use the event contract in that space is if you're seeing your VWAP hold and you're making these higher highs and pulling back into the area and holding above the VWAP, you can look at this, for instance, early this morning, because these contracts you can buy almost 24 hours, you could have looked at that 44.40 area and said, yes, but the price literally would have been maybe half the amount that it is. It's tracking at $16 right now. And so coming into it much earlier, you can see that. And I will show you how we can see that super quickly. I know we're getting past our time, but I do love it so. So here is the 44.30. Let's get to it. And you can see at 7 or 8 this morning, even 4 this morning, that number for yes is sitting high at the 15 area. So it's really held its amount quite well. So that's really, actually really great. Kind of surprised about that. But in terms of the overall motion, you can see those dips in the prices into that VWAP, which occurs really at that same time, 4:30 in the morning. It gives you that opportunity to position using that region to say, hey, listen, that's probably going to be my cheapest price. And I'm going to see if I can make 15, 20, 30, 40% off of it, which is really coming into that space right now. So with that, I just want to say thank you so much, Brian, for spending time with me today. It's always a pleasure. You are an inspiration, and you do a lot of really wonderful things for the trading community. I know a lot of people know where you are, but the way that you help folks swing trade from alphatrends.net, where they can find you, could you tell us a little bit about how that service works, how we can engage with you and really get to spend more time picking your really great brain?
Well, that's kind of you to offer me a chance to pitch my wares as it is. Yeah, I mean, alphatrends.net is a subscription product that focuses on swing trades and education, really. I mean, I do video analysis each day of the markets and of individual stocks, looking for the low risk, high probability entries into swing trades. So I do 3 videos per day. They're all pretty short, but they have a ton of education packed into them. If I had to write it out as a blog post, I'd be, still writing yesterday's, but for the amount you can get it pack into a video. So alphatrends.net. And then, I do my free video on YouTube on Friday, but, just follow me on Twitter and you can find all that information.
Yeah, that's really true. And the great thing about getting to study with Brian is really that he gives you all of his secret sauce. He doesn't hide anything.
So
this is the way I work. This is how I do it. You either follow along and get it right or don't, and you're probably going to get it wrong. And so it's really as simple as that. Thank you, everybody, for coming in to see him and to see us. Thank you for spending the time with us. And this has been the Place Your Trades Network and the Daily Edge.
Thank you.